Market attention was focused on the release of the Reserve Bank of Australia's board meeting minutes. The meeting minutes provide some perspective into the Reserve Bank's board view on growth and inflation, and most importantly, their view of the risks around the outlook. The board minutes usually provide the market some insight on the likely timing of the next interest rate move. Earlier this month, with the statement released, the Reserve Bank of Australia appeared a bit more concerned about inflation pressures. The release of the meeting minutes did confirm that the Reserve Bank of Australia's board are trying to prepare the markets for increases in interest rates down the track. In particular, the Reserve Bank of Australia's board said that if economic growth continues to evolve as expected, then higher interest rates will be warranted. The increase in terms of trade in Australia has provided a massive increase in income for the country, and this is evident in the strength of the labour market over the past year. However, there are concerns that this will translate to higher inflation pressures down the track. As a result, we expect the RBA to increase interest rates in August, if not sooner. This should keep the New Zealand dollar low against the Australian dollar for most of this year. We are gearing up for the government's budget for 2011 to be released on Thursday from 2 p.m. We're not expecting any great surprises from the government, given many of the big changes have already been well signalled. The earthquakes over September and February have been key in shaping the budget outlook for the next few years. The net cost of the earthquakes to government is around $5.5 billion. In addition to this, they have to meet the net cost for the Earthquake Commission, and combined with this, they're actually seeing a weaker revenue outlook for the next few years as a result of weaker economic growth. Putting all these factors together, the government is going to face some large fiscal deficits over this financial year and next. However, the government is extremely focused on cost cutting, and we expect that this will bring the fiscal deficit back to surplus within the next 5 years. Fonterra's global dairy trade auction showed a decline in dairy prices of 1.1% on a trade-weighted basis overnight. However, in the context of recent declines in hard commodity prices, this was actually a fairly subdued result. It does indicate that demand for dairy prices and other agricultural commodities remains fairly strong at the minute. The New Zealand dollar fared relatively well overnight, despite the weak sentiment in offshore markets, which usually weighs on the New Zealand dollar. One factor that may have been contributing to the relative New Zealand dollar strength was a report released by Fonterra late yesterday evening. Fonterra has indicated that dairy production is likely to be at record levels this year and up 4% on year-ago levels.